morning, Mark Soderberg with ADM Investor Services with your morning ag outlook for Tuesday, May 6th. Well, mixed trade here overnight across the ag space. Corn right now steady, the two better, and the old crop down about a penny on new crop. Mixed trade here in the wheat, up 3 to 4 in Chicago, down that amount in Minneapolis, while Kansas City is steady to 2 lower. And mixed trade in the soy complex as well, 2 to 3 lower beans, 60 points lower or so in the oil, while bean meal has firmed up steady to about $1 better. Yesterday's favorable weather outlook did bring heavy selling across the ag space, particularly in the corn. We had them selling about 23,000 contracts. This cut their long position now down to about 50,000, which, if realized, would be their smallest long position in 6 months. They also sold about 6,000 beans, 6,000 oil, 5,000 in the wheat, and a couple thousand in the meal. Money managers are sitting on a near record short position in the meal, and we have them short a record amount across the 3 classes here in the wheat. Yesterday's crop progress updates did show U.S. corn plantings advanced to 40% complete. That was above the year-ago pace of 35% and just a smidge above the 5-year average at 39%. 11% of the crop has emerged. Plantings in the far western corn belt are running well above the historical average, that led by good progress in the Dakotas. Progress in the central third, however, is running just a touch behind their 5-year average, with both Illinois and Kentucky 12% below their historical pace. Look for that to flip this week with the much warmer, drier outlook across the central Midwest. Bean plantings at 30% complete. We're exactly in line with our forecast and continue to run at a record pace. Every reporting state is running above the historical average with the exception of Illinois, which at 33% is only off 1% from their 5-year average. Again, look for that to flip this week. Winter wheat conditions did improve 2% to 51%, good to excellent. That's what we were looking for. Spring wheat seedings advanced 14% to 44% complete, just below a year ago. However, well above the 5-year average. Rains this week will favor the deep south along the Gulf Coast and the Delta region. 1 to 3 inches will be common from East Texas all the way east over to South Carolina before some much needed drying into the middle part of the month. A bit of a technical bounce here overnight in July corn as we did hold above yesterday's 6-week low. Support is at that late March low, which is at 450.5. While U.S. export demand does remain strong, it's just not been enough to keep prices up with growing production forecasts in South America, notably Brazil, and the favorable weather outlook here in the U.S. I think we could see slightly lower ending stocks on old crop corn in next Monday's USDA WASDE reports. However, new crop will likely show inventories building to possibly well over 2 billion bushels. July beans remains in about a 1040 to 1065 range. However, is currently challenging the 100-day moving average to support that at 1042.25. U.S. export demand remains strong in face of all the trade drama. We'll just continue to await to see if and when the U.S. and China can sit down and begin to address the current trade standoff. Bean oil was challenging, and now I believe we did make a new low here for the recent move. Market just seems to be growing a little bit impatient, waiting for guidance from the Trump administration on whether the blender's credit will or will not be reinstated. Despite all the record short position here in the meal, rebounds in July futures appear to be capped at the $300 level, and we just can't seem to generate enough momentum to shake speculators from their record short position. Right now, given current conditions, I'm guessing the average yield on the U.S. winter crop at just over 52 bushels an acre and production at 1.358 billion, both just a touch above a year ago. Thank you for listening, everyone. Hope you have a great day.